Hi traders, how are we doing? 1st of December, what a fantastic November we've had. Quite a indecisive market. There has been tons of trading opportunities, but the main thing we've done with our community is adapt to a faster, quicker style of trading, which is more suited for those that have time to trade in and around the open. But the beauty of trading smaller time frames based on momentum, in and out, smash and grab, is that you can pretty much trade at any time, anywhere, subject to following the strong checklist which we give our members. So, lots of questions regarding our trade ideas this month. The amount of trades sent was significantly less, but we still met our 2,000 pip plus monthly average. And I'll just show you some of the setups, in fact, that we took over the last couple of weeks. Now, these are for our members to follow at their own will. I believe the quickest way for new traders to make money is to simply follow experts. Here on the trading floor, in fact across our trading floors, we have over 21 professional traders, all from different walks of life, different backgrounds, different styles of trading, and the majority of our trades sent are discussed internally and within some of our more advanced trading community. That's how we maintain such a strong and high success rate. So a couple that we've taken this week, we have a pending order sitting on a Kiwi Yen buy opportunity. We had a fantastic trade which got to nearly 100 points on NAS yesterday. That was actually sent by Cameron, one of our traders on the trading floor. Again, we've had some great momentum opportunities. Kiwi Swiss plus 50, the daily setup plus 130 points. So it's always quality over quantity. We never send hundreds of trades. I know there are people out there who pretend they're traders that send 20, 30 trades a day. You've got more chance of losing money taking that many trades. It has to be of high quality, and when the market's so volatile and indecisive as it is right now, it has to be of high selection. So my personal way of adapting is, as I said, a more smash and grab, fast-paced way of trading. Anything between 20 to 30 points in front and a closed candle on an hourly time frame is when I start to manage my position, stops to break even and so on. Again, look, another sort of Kiwi Swiss 14-point momentum-based setup. Again, we're talking through these trades quite frequently with our traders. 60 on euro dollar, plus 80 on Kiwi, plus 35 on a euro position, plus 50 on a Kiwi Swiss again. So again, I think we can see a pattern in some of the assets that we're trading here. One in particular that I actually took myself was this euro USD buy stop order. This was actually technically setting up on a 4-hour time frame, taking into consideration an overdue daily pullback, which in fact we actually got. So the euro position here that we can see, high risk to reward trade, great trading opportunity, 4-hour time frame. So let's have a quick look at that trade in fact. Okay traders, so euro dollar daily time frame, this is exactly what we've seen. I mean, as we can see, we've been heading bearish for quite some time. It was up in and above the 122 area in May. We're down now at 112. So significant drop, and as we say, overdue a pullback. And I love the fact the weekly was sitting tight. You can see that price has previously met 112, both sides in fact. So we know it was an ideal entry area. You can see the weekly's due a phase 2. Phase 2 is the weakest part in trend, so naturally due a pullback. Previous week's candle finished bullish. This is what we call a low test bar. The market opens, test low, buyers with a fight, buy, open and close in the top third of the candle, indicating the next week should be bullish. As we drop to the daily time frame, this pullback is slightly more exaggerated, and you can see that 112 level being rejected quite cleanly here. It's why it's so important to take advantage and really understand what's going on in and around these key points. With some of our advanced guys, we'll be focusing on looking at price, especially the sellers showing exhaustion and introducing buyers nice and early. But for those that are not perhaps as advanced as others, this is definitely an easier and an ideal way of entering, in fact. It means you're simply more in control once the market's already moved in your favoured direction. I love the fact, again, we've got strong sellers, and we suddenly start to see our biggest phase 2 in the recent move down. After that, we get a lot more buyers creeping in, so we're not seeing these strong bearish candles like here or here. We're starting to see it get quite choppy. Now, as we're approaching a key level, this is typically the price action that we're used to seeing, so we know a turn's going to happen pretty soon. So again, we've got a strong selling, weak buying, suddenly transforms. We've got a lot more buying taking place. We've got a breaker cycle in here. Bit of a higher low formation as such. Strong buyers, weak sellers, and we're now teeing up. So anticipating the 20-50 moving average crossover, which again on the smaller time frame is a way of identifying a quicker turn in the market. We entered on the high of this 4-hour candle, our first bullish candle to form after we saw a slight retracement. And again, the buy stop order triggered on the following candle. It's important to have your stop loss positioned in a reasonable point. As you can see, the following 4-hour candles was bearish. I believe this is the last push from the sellers before we saw this acceleration higher. So with experience and working with your coach or your mentor, you'll start to understand the turning points and perhaps what you need to do and when you need to do it in terms of pulling the trigger and being patient. As the market kicked off, again, we got a 54, 55 pip gain. It did go to highs of nearly 90, but again, you wouldn't want to be involved when we're seeing candles like this. This is usually news-based, so again, it's always good to protect yourself before falling into high-impact news announcements. Again, where do we see this now? We come out of this with a 54 pip gain. Again, no real significant profit. It was just over 400 quid, but it's good for a quick momentum-based style trade on a higher time frame. There was plenty of ways, in fact, to execute on the smaller time frames using a 5-minute or 15-minute opportunity entry, which I did highlight to some of my trading team, in fact. So we'll take a look at that in a minute. Where I believe price is going to move to next, I do think we'll see another push higher. If you look at this weekly phase 2, naturally we look for a minimum of 3 candles, which is 3 weeks. So I think we can get slightly up higher, build a bit of a base again and look for further shorts back down and below 112. So something to keep in mind, and just to show you on an hourly time frame here, this is all a bit of a mess. So don't get yourself caught up trading when you can see that price has failed to take out 1 candle in here. So always bear that in mind. We want clean simplicity. We want markets showing direction. We want clean and beautiful opportunities to trade. So again, quality over quantity, which is exactly what November's been all about, and I typically think December will be too. So less trades, better quality, high performance, work with your mentor coach, book a coaching session, and I'm sure your trading will improve. December's going to be great. January is usually and historically probably our best trading month, along with October, I would say. So look, all the best, guys. Keep in contact if you need anything, and good luck in December.
Yes.